Moving on smartly to the next session, session 9, which is on creating the conditions to accelerate private sector trade and investment. And we begin with an opening statement by His Excellency Wamkele Mene, who is the Secretary General at the Secretariat of the African Continental Free Trade Area.
Yesterday we were invited to consider marriages between the Caribbean and the African continent. I think that over the decades we have had very, very strong emotional and historical ties, which is very important to celebrate. But one of the outcomes of this event yesterday and today, I certainly hope will be for us to take our relationship between the two regions to a higher level, to the next level, beyond expressions of historical and emotional ties, which is important, but to take this relationship to investment and trade flows between our two regions. I will speak very briefly because I think the benefit will be from the panelists themselves and getting their insights. We have significant challenges on the African continent, as many of us know, over the last 60 to 65 years. In general, the over-reliance on export of primary commodities, which we are trying to change, smallness of national economies, lack of industrial depth in some parts of the continent, and all of these challenges that have existed for many, many years, our heads of states and government said we need to respond in a way that will be forward-looking, that will make the African continent globally competitive, that will make the African continent an industrialized continent that creates jobs for young people and that contributes significantly to the global economy and global output. That is why today we have the African Continental Free Trade Area, because in the wisdom of our heads of states, they understand very clearly that the AFCFTA seeks to consolidate a market of 1.3 billion people with a combined GDP of 3.4 trillion United States dollars, which is projected by the year 2035 to be close to 7 trillion United States dollars, that is to say combined consumer spending as well as business spending. So it's a very significant market that presents very, very compelling investment opportunities, which we would, of course, invite our brothers and sisters in the Caribbean to consider. The second objective of the AFCFTA is to address precisely the question that will be put to the panel, and that is, how do you make sure that a trade agreement is used as an instrument for ease of doing business? And we have, in the drafting of the African Continental Free Trade Area, we have sought to answer that question. How do we make sure that we create conditions to accelerate private sector participation in Africa's economy, and of course to accelerate investment by the private sector to create jobs for millions and millions of young Africans? Some of the tools that we have presented in the form of the agreement to make sure that we see this ease of doing business enhanced are the following. You may be aware that with Afreximbank in January 2020, we introduced the Pan-African Payments and Settlement System, January 2022, this year, so that the private sector can find it easier to transact across regions of the African continent, to transact using local currency. 42 currencies on the African continent, $5 billion annually is the cost to businesses. The cost, and mainly small medium enterprises, is the cost for them to transact across regions and sometimes neighboring countries. And so the Pan-African Payments and Settlement System will enable you to transact with your counterparty. You are in Ghana, you use a Ghanaian cedi, your counterparty is in Kenya. You are not required to use the dollar or any other third currency. You simply transact using your local currency. Your counterparty receives the payment in local currency in Kenyan shillings. The large corporations are able to circumvent this challenge of the cost of trade in Africa. But the small medium enterprises and young entrepreneurs, they are the ones who are constrained by the cost of trade in Africa. And so ourselves and Afrexim Bank believe that the Pan-African Payments and Settlement System will contribute to the ease of doing business, particularly by small medium enterprises that are led by women. On the African continent, small medium enterprises have created over 450 million jobs, contributing well over 60% to Africa's GDP. So it's a very, very significant part of Africa's economy, young entrepreneurs and small medium enterprises. That is why we have to take more actions to ensure that they benefit from trade by establishing the right business environment for them to thrive. We don't intend that the AFCFTA Adjustment Fund is going to be accessed by the Minister of Finance, who will say, thank you very much, I need this for budget support. No. What we expect is that the Adjustment Fund will make a direct impact at sector level. So if the textiles and clothing sector or the auto sector or any other agribusiness sector requires further support, this instrument, the AFCFTA Adjustment Fund, is intended to provide that support, whether it is for the procurement of capital machinery, retraining of workers to be redeployed in another part of the economy. That's what the AFCFTA Adjustment Fund is for. So we have sought, as I conclude, we have sought to make sure that we have a trade agreement that is forward-looking, that places the private sector, particularly small medium enterprises that are led by women and young people, that places the private sector at the heart of benefit of a trade agreement. We've seen trade agreements, of course, around the world. We've looked at the critique of trade agreements not being sufficiently responsive to the needs of the private sector, and we've sought to address that challenge in some of the tools that I've mentioned today. We've also seen how trade agreements have been critiqued in the sense that they benefit only a few, or the elite. There was somebody who said that trade agreements have benefited the elite in North America and have shifted jobs to Mexico. Of course, a very unsophisticated analysis, but we all know the results of that analysis. The person ended up in the presidency of the United States. Now, what we have a challenge to respond to is that perception of how trade agreements do not include the very important segments of society that I've mentioned, and that is women in trade, small medium enterprises, and young entrepreneurs. If we can get a private sector that is embedded, at least in the context of Africa, that is embedded, fully embedded in small medium enterprises and young people, I think that we will be well positioning them to benefit from this market of 1.3 billion people. There's absolutely no reason why the African continent in 20 to 30 years' time, if we harness the private sector and provide the necessary conditions for the private sector, there's absolutely no reason why the African continent in 20 to 30 years' time, cannot be as globally competitive as similarly situated countries in terms of population. I believe fully that in 20 to 30 years' time, where we do this, where we use a trade agreement to harness the benefits for the private sector, we will see the industrialization that we want to see, we will see the job creation that we want to see, and more importantly, Africa at that point will become probably the 7th or the 8th largest economy in the world 20 to 30 years' time from now, maybe sooner. But certainly, I think it is within reach, but it all depends on how this trade agreement will interface with the private sector and how we will support the private sector in terms of the provisions that we have set out in the treaty itself. So I want to thank all of you very, very much for your attention, and I wish all of us very good deliberations for the rest of today. Thank you.
Moderator, Mrs. Tricia Tanis, who is head of the Barbados Private Sector Association, has a very large panel. I'm going to invite them on stage now. Mrs. Tanis and her other panelists, Florizel Lisa from Corporate Council on Africa, Mr. Arnold Ekpe, Business Council for Africa, Mr. Mohamed Atef, Elsewedi Electric, Mr. Adewale Tinubu, Oando PLC, Ms. Annette Mark, Caribbean Association of Investment Promotion Agencies, Mr. Anthony Branker, Barbados Chamber of Commerce and Industry, and Mr. Calvin Hamilton, arbitra and a member of the ICC, the International Court of Arbitration. Ladies and gentlemen, the floor is yours.
The private sector may be described indeed as the engine or driver of trade, and investment may be described as its accelerant. We're therefore privileged today to have before us a group of persons whose diverse backgrounds and expertise will surely provide a wealth of knowledge and viewpoints on the subject at hand. This session, entitled Creating Conditions to Accelerate Private Sector Trade and Investment, is intended to dive into the major pillars of what constitutes an enabling policy and facilitation environment for sole traders, small and medium-sized enterprises, and large conglomerates as well, so that we're all well poised to attract development-oriented investment. The population of the continent of Africa is stated at circa 1.2 billion persons, and the population of the Caribbean just shy of 40 million, or just teeter-tottering around 40 million. The aggregate of these vast markets holds enormous potential for cross-border trade and investment, and much has already been said about the shared history of the continent, particularly the West African states and the Caribbean, and we note that for many of our countries, shared experiences and challenges have extended from the post-colonial independence era, even persisting to the present day. It is with that foregoing in mind that we should operate on the following basis. Long gone are the days when both Africa and the Caribbean are viewed and used solely as sources of raw materials or favorable geographical hubs, producing skilled but low-paying jobs for the benefit of international interests. Investment into our respective economies must redound to the social and economic benefit and enfranchisement of our people. It must be the mechanism by which our citizens can put their skills to use in industries that are indigenous to or are controlled from within our trading and domestic spaces, and where our people are inspired and incentivized to contribute to the domestic space. The correct framework must be one where persons will be compensated competitively, allowing them to maintain high standards of living, and even beyond that, and more importantly, generating intergenerational wealth creation for themselves. Our panel is esteemed, diverse, ready to engage with you, our audience, on issues such as the establishment and maintenance of sound financial frameworks, dynamic business facilitation structures, and effective public-private sector partnerships, all with a view to the achievement of a lucrative and beneficial cross-border trade environment for all. So let's get started. So I will start on the matter of business facilitation, and that's the note that His Excellency Mene ended on. And it's extremely encouraging to hear him outline some of the improvements in more recent times as it relates to payments networks, dispute resolution, balanced regulatory environments, and the like, and certainly funding through Afrexim Bank. I'm going to start with my panelist, Annette. Mark Annette is the president of the Caribbean Association of Investment Promotion Agencies and executive director of Invest St. Vincent and the Grenadines. Annette, the World Bank Doing Business pre-COVID report, we know that has been plagued with some issues, but 2019's report seems to have been the last report that seems to have been fairly robust and without controversy. Even at that stage, it reported that there were gaps between regulatory efficiency, inefficiency, and quality across all global regions, including Africa and the Caribbean. And resolving insolvency was the area with the biggest gap between sub-Saharan African economies and OECD high-income economies, as well as in cross-border trade. Certainly, we looked at CARICOM. The three top performing countries at that point were Jamaica, St. Lucia, and Dominica, but even so, struggling with issues such as resolving insolvency and the registration and access to credit, to name a few. Annette, please, on the subject of business facilitation, which is exactly why we are here, and it's the big pillar, please, how can the ease of doing business be improved in Africa and the Caribbean?
Thank you for that question. And I do have to start by saying that I know we stand between lunch and the audience, so I'm going to try to be as quick as possible. However, this is a very heavy topic, and I don't even think that we could do that and do justice in giving the answer here today. But I'm going to stick to my points and try to do it. By way of background, the Caribbean Association of Investment Promotion Agencies is an association that represents 24 Caribbean IPAs in 23 member states. CIPA, we generally focus on attracting investment into the region, promoting the Caribbean as a place to do business, and supporting business climate reform among our members. Now, over the past 5 years, with reference to the Ease of Doing Business report, which has since been discontinued, there are 4 top areas. I can't just concentrate on the resolving of insolvencies. And by order of priority, it's registering property, getting credit, resolving insolvency, and starting a business. Trying to do this as quickly as possible, people. In respect to registering property, the number of procedures and the days to register property in the Caribbean is among the highest in the world. Most of our territories are ranked 60 out of the 190 countries in the report. Notwithstanding this challenge, investors to the region have found other ways to do business. They have done leasing of properties for 99 years. In addition, some of our investment promotion agencies are vested with Crown lands and are able to facilitate long-term investments with our investors, with investors. Other investors do enter into public-private partnership with governments, allowing for the use of government land to form part of the investment agreement. Then there's getting credit. Access to inclusive finance is among the greatest challenge that business in the Caribbean face. And that is starting a business and in operating the business. The credit infrastructure system is in need of improvement with, for example, enhanced credit reporting systems, credit bureaus, and public registries. Skipping pages. There are some countries in the region that are advancing changes to their credit infrastructure. Among these are the Dominican Republic, Guyana, Haiti, and Jamaica, which have dedicated credit reporting legislation that have attracted the operators of private credit bureaus. Private credit bureaus operate in 4 other countries: Barbados, Belize, Suriname, and Trinidad and Tobago. And they follow codes of conduct which have been introduced by the private sector. The credit information market is taking shape in some countries where it had long been missing, like the Bahamas, and to a lesser extent in Suriname, while multinational companies have expanded operations into the region, including Credit Info and CRIF. The ECCB has successfully spearheaded effort to introduce a harmonized legal system in the OECS, and it is now supporting the introduction of a unified credit bureau. I believe this is to be officially launched in December of this year. At the same time, it has recently started to replicate those efforts by aiming at introducing a unified system for secured transaction. Getting credit from the banks, and please bankers, excuse me, for small businesses is a challenge. They are heavily risk averse. However, there are credit guarantee schemes in the region that allow for businesses and particularly small businesses to access financing and have their loans secured through the Eastern Caribbean Partial Credit Guarantee to the tune of 85% of that loan. This initiative is actually an OECS member state initiative being facilitated by the World Bank and regulated by the ECCB. In respect to resolving insolvency, the Caribbean trails in effective methodologies to resolve troubled debt situation, and those deficiencies were reflected by the low ranking in the Doing Business report. The overreaching goal is to improve the business environment in the Caribbean with effective bankruptcy insolvency systems that provide for legal frameworks to enable viable firms to reorganize where they can be saved and provides an orderly means where they have to exit the market. And this was so evident during the COVID pandemic, and we lost a lot of companies as a result of not having these systems in place. In the past few years, the Caribbean countries have been focusing their attention on the following: legal frameworks that support credit and debtors that are properly balanced, so allow for creditors to be placed on an even keel with those institutions that are lending, systems that allow creditors to be adequately empowered. So legislation, they are looking at legislation to ensure that that creditors are, again, given certain protections, and the training of personnel. Much of this work, however, is being led by the World Bank through the international funding cooperation across the region. I go on very quickly. There is also starting a business, and of course, we rank very low within the region again. Excluding Jamaica, the Caribbean countries average between 114 out of 190 countries. We are, I'm trying to summarize as much as possible. In the region, starting a business takes approximately 27 days. And at the highest point, Haiti is 97 days. The other way around. The lowest point is Haiti is 97 days, and at the best, Jamaica is 3 days, and I stand corrected if it has improved even since then. Furthermore, over the last 5 years, a number of procedures have been put in place in Suriname to reduce the procedures for starting a business.
We're going to pivot now to another pillar called funding the agreement. And I'm going to go to Mr. Arnold Epke, Chairman of the Business Council for Africa. Afrexim's bank strategy reads in part, its success will be defined by the satisfaction of its stakeholders through increased trade finance and improved facilitation of intra-African trade and value exports. Meanwhile, the Caribbean Export Development Agency also states that they provide a range of funding solutions that can support your business in the short and medium term. And these are just two of several organizations which offer funding to business. Mr. Epke, based on your knowledge of available resources, what can be done to increase funding capacity for lending, particularly to small and medium-sized enterprises in both the African continent and CARICOM?
The challenge we face in Africa is very different. The Africa Continental Free Trade Area is doing an immense amount of work. to try and open up the continent, but Africa is actually 54 countries, it's not one country. And it's much easier to come to the Caribbean than to move from one African country to another. It's much easier to move goods from Africa to the Caribbean than it is to move goods from one African country to another. The currencies are not convertible, so it's much more difficult for African countries to trade with each other. We do have certain realistic problems to fix. I have never believed that financing has been the problem. We need to do the basic work on which financing follows the opportunity. If the economics are right, you get the money. But if the economics are not right, you do not get the money. Our Exim Bank, for example, has done an incredible amount of work in trying to create the opportunities for African countries to trade with each other and with the CARICOM countries going forward. But when we say that it's 1.3 billion people, it's 3 billion economy, it's not one economy, it's 54 economies. And I think the ability to generate that opportunity, I'm very excited about this meeting, and I want to thank the organizers on both sides for doing it. The attendance is absolutely incredible, very encouraging. And we're not coming here for a holiday, okay? So real congratulations to everyone involved in getting this done. But I'm a businessman, and at the end of the day, the numbers have to add up. We need to make sure the numbers add up. In terms of the opportunities, I've met a few people here. Everyone is looking at opportunities. We are one people. We want to work with each other. There are challenges to doing that, but they're not insurmountable challenges. But let's not be ahead of ourselves. Let's fix the basic problem. And the basic problem is that we have to create an enabling environment for the money to flow, but the money is there. Our Exim Bank has already committed, what, $700 million? That they're willing to invest, and they're a relatively small player in the scheme of things. So I'm actually very positive about getting things done, but I think we need to fix what needs to be fixed first and not expect things to happen if we don't get those things done.
What is the chief issue that you would think needs to be, what's the chief plank that needs to be fixed? What is clogging the bottleneck?
I think the first thing is we have to try and build scale in Africa, okay? 54 countries, maybe 4 or 5 of them, Nigeria, South Africa, Kenya, Egypt, Morocco, and maybe a few in between, make up over 60% of the economy. The others are very small. 14 or 15 of those countries are landlocked, okay? So they have inherent problems. If we make it the market much bigger and open up the market, there's nothing that says Togo cannot export to Nigeria, okay? But right now, it's difficult to do so, okay? The joke is that it takes a longer time to export from Togo to Nigeria than it does from the States to Nigeria, okay? Because of problems that we Africans have put in place. Let's fix those problems. And I think the challenge for me is that once we fix those problems, and I'm not talking about the problem of electricity and all that, we will unleash in Africa a huge potential, which would also benefit the CARICOM countries. Because by nature and by inclination, we are one people, okay? So coming here and working, a lot of my friends are married to West Indians, Jamaicans, Barbadians, and all that. Coming here is like coming home. So we will find a solution. But we need to fix those problems first before we move ahead. That's the message I'm trying to convey.
Well, we're going to pivot to sectoral opportunities. How are we actually going to land this agreement? To that, I'm going to pivot to Moitaz Sam. He is the Corporate Treasury Manager of one of our platinum sponsors, Eswidi. Several opportunities exist for the Caribbean relative to trade and investment with Africa, including potential export markets for goods and services, availability of raw materials, a large potential workforce, high digital adoption. Given this rich economic landscape, which sectors, in your opinion, offer the most potential for private sector trade between Africa and the Caribbean, and why?
We see here potential and we see opportunities, so much opportunities here. I will depend on my company experience that we are interested in energy, water desalination, water treatment, industrial. So I see all these opportunities here. So how we can benefit of these opportunities, it's depending on the Caribbean Union, how they will solve the problem of the new companies to enter the market, how they will figure out the opportunity, a sizable opportunity. Let me tell you something. I hear here in the conference that there are several opportunities for renewable energy. We are interested in renewable energy. But the problem that the scale and the size of the project is somehow it's a very small size to come from Africa to Caribbean to invest in it. So we can land on the Caribbean if there is several opportunities with a good size of opportunities. So I see here the opportunities. I have said the renewable, it's the green direction for the whole world. So we see renewables as water and solar and wind. We see hydropower opportunity. We see the industrial park. This will benefit the Caribbean that they can manufacture locally and they can export their products outside the Caribbean. So there is several opportunities. It's depending on the Caribbean and on the decision. And we are happy that we are here with AfriExim. AfriExim will give the support, will give the finance that can make things happen. We already partnered with AfriExim in several countries in Africa, and we had so much success stories in Africa because of AfriExim. They are covering the finance, and we are doing our job. So we're looking forward to be the same model as we succeed in Africa with AfriExim, that we can succeed here.
We have opportunities in the African continent. It's a massive landmass, continuous, lots of scale and scope just geographically. And we juxtapose that against CARICOM, small islands separated by water, and fantastic opportunities in terms of renewable energy, wind, solar. How do you think we can actually scope and scale from CARICOM coming to the African continent, given the geographical limitations?
It's depending on the raw materials. What can be the raw materials here in the Caribbean that can benefit companies or countries in Africa? I think it's all about the raw materials now. It's the global problem is raw material and access for raw materials. So Caribbean and Africa, I think we have so much raw materials that we can benefit to export to each other. For sure, the Caribbean, I think there is opportunity for a seaport that can increase the exports from the Caribbean to the African countries. I heard that there is a lot of problem while we were discussing now, that I heard there is a problem between the African countries to export to each other because of the regulations, because of the countries landlocked and everything. So this can be solved if we have an agreement with the Caribbean for exporting raw materials from and to the Caribbean to Africa.
Thank you. Thank you very much. Okay, we're going to pivot to policy responses. As we know, successful private sector businesses, we drive economic growth by stimulating domestic income, providing jobs, paying taxes, and so on. But we need governments to facilitate largely the policy spaces in which we have to operate. I'm going to put this question to Mr. Anthony Branker, President of the Barbados Chamber of Commerce and Industry. Anthony, what policy changes and support measures would you like to see to encourage private sector investment in the Caribbean and also in our key African partners to facilitate the Caribbean expansion that will be facilitated by the newly signed Africa-Caribbean Trade Agreement?
Forums such as this, these are necessary for us to break down that veil that has been obscuring Africa and the Caribbean for so many years, whether deliberately or not. Businesses in Barbados and Africa, we really did not know what was happening in each other's backyard. And I think that the more that governments can facilitate these type of forum, we are starting to open up each other's market to each other. And what it does, it starts to build confidence. I heard Dr. Meany, when he addressed us earlier, he really highlighted that, that investor confidence ought to be high and to be strong in terms of investing in Africa. And that is a critical component to moving, the needle forward in terms of investors from the Caribbean going into Africa. So I thought that what Dr. Meany said was quite meaningful in terms of what Africa has done to facilitate Caribbean businesses coming into Africa. But on the other side of the Atlantic, we now have to ask, what has Caribbean governments done to facilitate us moving goods or services from Africa into Barbados? And certainly we have to look at some type of trade arrangements that would facilitate and tariff arrangements that would compensate for the high freight costs because of the distance we have to carry. So therefore, I think that to facilitate the movement of goods, governments across the Caribbean should be looking at what sort of tariff concessions can be put in place so that African goods could get to the Caribbean at a competitive rate. I think that is necessary. I think also that we have to talk about standards. This resonated with me as I was upstairs with the Ghanaian delegation, because we sometimes put standards in our policies across, certainly I can speak for the Barbados market, that we sometimes put standards in place that inhibit good products from coming into our markets because, we've set a bar that is so high that sometimes small changes to that policy we put a no-no to. I think our government policy should have regulations that says, well, we are intending to build trade between Africa and the Caribbean, and therefore the standards that we will comply with, that we will accept, that the standards, could be such that allows for some flexibility. But I think that having set up for forums like this, it is for service organizations like the Chamber, like the Manufacturers Association, like the tourism organizations across the Caribbean, to build on these opportunities to create we have to move away from just the talking and walk the talk. We have to get to a stage where we open our members to what is available, and the service organizations like the Chamber must be facilitating, must be exposing our members to what is available across the African continent. So I think that forums like this will lend to that. But I also think that the Prime Minister said it in her speech, we have to build relationships. Businesses thrive and businesses flourish, and trade happens when we build relationships. We have to put maritime and air lanes and have those linkages in place, because when I heard yesterday that it took 28 hours to get here, I was saying, wow, what you mean? To go to Africa or to Kenya, I was told today is 30 hours. That it is a 30-hour trip. Certainly that is not encouraging. So we have to make sure that we have the maritime lanes and the air lanes that would facilitate building relationships. There's nothing like face-to-face. The virtual meetings will take us thus far. But we need to have dinner together. We need to sit together. And we need to have these type of lanes and routes open up. But I think too that private sector needs a seat at the table. So often governments go and they go from government to government, and yes, they say that businesses are the ones that trade, but yet they go with governments, persons, a government delegation, and there's no one representing business. Businesses need to be at the table when governments are negotiating. And therefore, thank you. And therefore, when we talk about a change in policy, I'm suggesting that a change in policy has to be one that embraces the private sector as the one who trades, and therefore have us at the table when they are going to wherever. I know that Barbados is opening up discussions with Rwanda and another, I can't remember the other, but where's the private sector in this? And I'm saying we have to move to a policy that embraces the private sector.
I want you to comment on the existing EPA, the Economic Partnership Agreement. that CARIF Forum negotiated back in, I think it was between 2008 and 2014, which allows free access for European goods and services into CARICOM. I want you to comment on that within the context of what we need. How will that impact on this agreement? And can we do a similar thing? And must we do a similar thing?
Clearly, if we want to walk the walk rather than just talk the talk, you've hit the nail directly on the head. We've put a trade agreement in place, that EPA in place with Europe, that allows, products to just come in. And we are still in a situation where we will have to pay duties on products from Africa. It is a no-brainer, really. The truth is that if we are serious about trading with Africa, then we must put a trade agreement in place that allows the free movement of African goods into the Caribbean.
Let me go to the question of infrastructure. And I'm going to pose this question to Mr. Adewale Tinubu, who is the CEO of another platinum sponsor, Onado. Mr. Tinubu, how important is adequate infrastructure to the economic recovery in both regions? When and how will this be addressed? And what role will public-private sector partnerships play in that recovery?
I mean, we spoke earlier on about the other speakers have made very good comments regarding what I'd say the software is for the ease of doing business, which really is regulation, ease of regulation, good court systems, safety of investments, ease of goods coming back and forth. But without a shadow of doubt, infrastructure is a fundamental problem. And you see the impact of infrastructure in terms of our competitiveness when we trade globally. So for example, as a result of challenging infrastructure on the road networks, exports from Africa tend to be about 15% more expensive, simply because our road system is that much more expensive as compared to Asia, where road transportation to get to a port is 3%, for example. Port transit time, in Africa, port transit time is 15 to 20 days. Port transit time in Asia and Europe, three days, 24 hours, your container is out when you ship. And that has a fundamental impact on competitiveness. We deal with other things, for example, energy cost. Energy cost in Asia using coal has been one of the biggest competitive advantages they've used in reducing their overall costs in terms of ensuring their goods and services have been able to penetrate markets. So for example, even though we're much closer to the Caribbean, goods and services coming out of China still continue to remain cheaper because of, or will be cheaper because of the cheap energy costs that there is. But I see a lot of those things as issues that are surmountable, because for example, with the drive for renewable energy in the Caribbean, it's 300 days of sunshine, so solar energy panels have become so much cheaper. There's wind available, so the energy costs, without a shadow of doubt, will come down substantially in the Caribbean. You already have very good infrastructure, and I was actually, it's rather unfortunate that the Caribbean always pushes tourism. And so we come for the beaches and the rum, but we don't really know that there's so much else that we can do in terms of, because your infrastructure is very good. So at the end of the day, even setting up manufacturing to ship to Africa with the relatively cheap energy sources that you have, because I noticed that you don't have power cuts here like we do in Africa. I mean, it's constant electricity, infrastructure is good. So there are means of surpassing those challenges that are there. And I think the other area which was mentioned, which I really think we need to spend a bit more time talking about, really is the fact that the ease of doing business, you find that countries that have ease of doing business are really countries that are transparent in the opportunities.
Yes.
And with that transparency comes increased appetite for investing in those countries. The transparency also yields competitiveness. So speed in terms of being able to incorporate a company. For example, in African countries that have done it well, like Rwanda, you can open a company in 6 hours, bank account, company open in 6 hours. You can get a permit to build your factory in 3 days, guaranteed, once your documents are filed. And invariably, you find that those countries that actually have good transparency tend to also be very low on corruption, which is also a big tax on doing business between the countries. What we did in Africa, particularly in Nigeria, which I had personal experiences of doing, was driving public-private sector partnerships in terms of being able to improve our infrastructure. So one of the things we did to bring down energy costs in Lagos, we launched the first gas distribution pipeline system where we took on over 200 industries and built a pipeline system. And we worked out with the government a structure wherein we would get gas on credit, we would take project risk, build out the pipeline systems, and we will invariably share the revenue. And that proved extremely successful. We brought down the energy costs across the board, and that was a very good infrastructure model which worked, which was a win-win. And we were able to replicate that in three other different states. We did that also with ports and systems towards being able to import goods into the country via jetties and infrastructure. The West African gas pipeline as well, so it was something that brought countries together. And now there is a North African pipeline system that is being done. But it works when the private sector, has full knowledge of what's available, there's cooperation, and the point that has been made that the private sector needs to have a seat on the table. I mean, I've often said, and I have a critic in the room, Mr. Ben Bruce there, who is always upset with our president in Nigeria, that when he travels, he only takes 2 businessmen with him. Luckily, I'm happy if I'm one of them, but the reality is that certainly having proper exposure, forums of this nature, wherein people really understand what the opportunities are there and they can actually key into these things. It's actually what you project is what is the result you would receive. And so I think that with the collective points that have been made, I mean, my own take on infrastructure in terms of supporting cross-border trade will be those points. Thank you.
Thank you so much. I'm going to pivot now for a completely different view. The lovely lady on my left, Flor. Flor, actually, she is the president and CEO of the Corporate Council on Africa, which is the leading U.S. business association focused solely on connecting business interests in Africa and those companies in the U.S. who are interested. For a completely independent view, someone who's looking on at the region, at these 2 regions from the north, what are the issues that you're seeing as you're advising companies in the U.S. Who want to get into Africa and CARICOM?
Well, we don't focus on CARICOM, unfortunately, but I do think that the CARICOM region shares some of the same constraints and challenges that we see in Africa. It can be transport infrastructure, it can be red tape and trade facilitation that needs to be improved, the rule of law, governance issues, corruption's been mentioned. But really, what I would say today, and we have members that are both US and African companies, multinationals and SMEs, is that there probably is no better time to look at Africa and ways that we can collaborate in Africa in terms of investing into their industrialization, pulling them into regional and global value chains. And I say there's no better time for a couple of reasons. One, prior to COVID, for example, I don't know that anybody would have been talking about producing mRNA vaccines on the continent, to be honest. But due to a lot of things that happened during COVID, now you're seeing major companies, US pharmaceutical companies as an example, who are looking at Africa and the platform of Africa and what it offers to produce vaccines in collaboration with African companies. Pfizer has an agreement with BioNTech in South Africa. Johnson & Johnson has another one. But another reason why this is a good time for US companies in particular to focus on Africa is because of the fact that the AFCFTA is really a game changer. It will reduce not only the barriers to trade amongst Africans, right, allowing their goods and services and people to move more freely, but it also positions Africa as an entire region and market where companies can look at the continent and say, okay, where is it that we can produce in Africa for the African market, now that goods can move freely, and where is it that we can produce in Africa to allow them to ship products to other parts of the world, including back to the US. And I want to use an example that the Secretary General shared with me recently, and our team. Ford has just invested $3 billion in South Africa to produce automobiles there over the next 5 years. And it's for the African market, because they now know that they can freely move those automobiles across the continent. I think it's also true that, so it's also true though that supply chains broke down during COVID. And now companies are looking for what they call supply chain resiliency. They don't want to be depending on 5 or 6 companies in Japan and Korea and China for their semiconductors, right? And being able to source inputs and intermediary products in Africa, have them move to one country or several countries that have the final production, and have inputs freely moving from other countries there, and then being able to know that those products can then, they're more competitive, the costs are reduced. This is really important. And I'll just end by saying that, you know, for a region of the world, Africa, that still accounts for only 3% of all global trade and attracts less than 1% of the global FDI. This is ridiculous, in my opinion. And there's so much opportunity there on the continent. And now all of these things are happening. There's a better doing business environment, a better enabling environment. We know the AU is working on things. You know, we have Kenya. I see the CS here from Kenya. They've been working on a trade agreement with the United States that would open up trade between the two of them, but also enable Kenya as a major economy in the region, and the first country to have signed on to the AFCFTA, by the way, to then be an enabling model for how the US can trade more with Africa.
I'm going to pose my last question to Mr. Calvin Hamilton. You are an arbitrator with Arbitra. And as we pivot towards one very, very important pillar, which is the legislative framework, and we heard His Excellency referred to dispute resolution as a key pillar. Please tell us, what role can dispute resolution play in addressing legislative or contractual trading barriers between the two regions?
Dispute resolution provides uncertainty if it's not managed properly. It's a risk, and as a result, it's a trade barrier. You've got to overcome trade barriers if you are going to exploit the synergies and the leverage that small, medium enterprises will have. How do you unleash that vast resource? 99% in many jurisdictions of those jurisdictions are small and medium enterprises. But they don't trade because of the uncertainty. They don't know the rule of law questions and how to address disputes when they arise. If you can overcome that, if you can get them to understand that there is a methodology that's clear and it's easy to use, then you would have increased the opportunities for small and medium enterprises to become involved in trade. You need an international legal framework. In Barbados, for example, that exists. Some of our other jurisdictions in the Caribbean, they need to sign on to, for example, the most important of those legislations is the New York Convention. And what the New York Convention does is it guarantees that host countries must recognize agreements to arbitrate. The operative word is must. The word they use in the convention is shall, which means the same thing. Must recognize agreements to arbitrate and must recognize awards, arbitration awards. Must recognize and must enforce them. So the courts in the national jurisdictions of the signatory countries to the New York Convention have no option, no discretion, but to recognize agreements and arbitration awards. And therein is the framework, the foundation, why arbitration is the preferred mechanism for resolution of disputes in the international community for trade and investment. This is a panel that's dealing with private sector and the promotion of trade and investment. If you have an arbitration clause in your contract and you are looking for financing, chances are that the financing rates that will be applied to you will be cheaper than if you did not have the arbitration clause. Why? Because the financial institution understands that there is a recourse in the event that their contracts are not honored and payments are not made. They feel more secure with an arbitration clause in the contract than without it. And I think I'll stop there in the interest of time.
Thank you so much, Mr. Hamilton. Ladies and gentlemen, thank you so much for your rapt attention. I want to extend a hearty thanks to our panelists, Mr. Arnold, EP, Chairman, Business Council for Africa, Mr. Adewale Tinubu, Chief Executive Officer of Onando PLC and a Platinum sponsor, Ms. Annette Mark, Executive Director, Caribbean Association of Investment Promotion Agencies and Executive Director of Invest St. Vincent, Mr. Anthony Branker, President of the Barbados Chamber of Commerce and Industry, Ms. Florizelle Elizer, President and CEO of the Corporate Council on Africa, Mr. Calvin Hamilton, Chartered Arbiter with Arbitra, and Mr. Moitaz Sami, Corporate Treasury Manager, again with the Platinum sponsor, El Swedi. Ladies and gentlemen, my name is Trisha Tanis. I'm the Chairman of the Barbados Private Sector Association, and it's been my pleasure to host Session 9. Thank you so much for your rapt attention.